Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be having a look at, with the markets being in turmoil out there, how Bitcoin is going to be fitting in. With Bitcoin appearing to have now entered the bear market, we're going to have a look at the wider markets for context in terms of how Bitcoin fits in and the direction of travel in the coming weeks and months. So what we're going to do is we're going to run down on the Bitcoin timeframes and make head or tail exactly where Bitcoin seems to be heading. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder. Please remember, everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. Before I begin, I just wanted to mention that I was going to do this video on the weekends as announced last week. Unfortunately, I was unable to do that this weekend, so from next weekend I will try and do the videos on the weekends. So as a result, I've pushed it back on the Monday for this week. Okay, so as per the title of the video, what we're really seeing is that Bitcoin is now appearing to enter into a bear market. And what happens with the mindset is that it can leave you behind. So what I'm really posing here is that when the markets change, then you have to change. Otherwise, the markets have a habit of punishing investors. So let's put Bitcoin into context in terms of exactly what's happening in the wider markets around the world, as well as in the USA, and see how Bitcoin will fit in. Okay, I'm just going to start off with what's being reported all around the world at the moment regarding the tariff situation. So obviously what we've got is that the tariffs have shaken the markets, and the question being posed here is, how worried should we be? And as you can see, the European stock markets have tumbled on the opening on Monday this morning here. And as reported by The Guardian, the markets are bracing for another volatile week as Trump's most punitive tariffs kick in. So we're in unprecedented territory where an economic policy seems to have brought the markets down. And what we're also seeing here is that the fear and greed index, which is for the wider markets, this is not just for Bitcoin, but for the wider markets. This is the one from the CNN Fear and Greed Index. And this is in the territory of 4. And if you look over here, this is in extreme fear territory. This is very rare. It gets down to these lower levels. It can come into this level, but normally it doesn't come back down to these levels between 0 and 5. So this is really telling us a barometer of, in terms of how the markets are faring up to the tariff situation. And even the Federal Reserve is saying that the larger than expected tariffs is likely to boost inflation and slow growth. So we're now in a position where, going forward, the markets are really bracing for stagflation. And in these types of situations, that with the economic fallout, including higher inflation and slower growth likely, then the Federal Reserve chairman has said that it was still too soon to know what the right response from the central bank ought to be. So really, in these types of markets, it's incredibly difficult to make decisions whether to reduce interest rates or increase interest rates. It really puts the Fed in an incredibly tight spot. And they confirmed that by saying that we face a highly uncertain outlook with elevated risks of both higher unemployment and higher inflation. And these comments actually have done nothing to staunch the global bloodletting in the stock market. So this is where we're at. All of the world markets are now in absolute turmoil, and the Hang Seng, the Hong Kong index, overnight is also very much down. So we're going to have a look at some of the wider markets to see the effects of the tariffs over the last few days. So if we have a look at the Hang Seng index, which is the one that's currently open overnight, this is the daily candle today. So this is now already down 6%. And since last Wednesday, the Hang Seng index is already down 21%. So again, this is bear market territory. This is the Nasdaq. And from mid-February here, when the index had got to 22,200, we have since come down to, as of today now, by 25%. So once again, we're in bear market territory. This is the FTSE 100, the UK 100 companies. And from the beginning of March, this has so far, up to today, come down by 14%. And as you can see, we seem to be having a waterfall fall down in the markets everywhere. And looking at the SPX, again from February down to where we were on Friday's close, this is now down 17%. So it looks quite obvious that this is now entering into bear market territory. So what we've really got are markets are in destruction mode and falling like a knife, not knowing where the bottom is going to be. The chart structure, as mentioned in last week's videos, seem to be breaking down, and what we've seen since last week, that they have now broken down much worse than first feared. So technically we seem seem to have entered into a full-blown bear market. As the SPX is down 17%, the Nasdaq is down over 22%. And if we have a look at Bitcoin, from the 109,000 top that we got back on the 20th of January, we seem to have come down by 31% so far. And what we've done is we've broken down below this symmetrical triangle. Now, it's at these points that people often quote the phrase that when there is blood on the streets, this is the time to buy. And this is a famous quotation from Warren Buffett, who has often said that you have to be greedy when others are fearful and fearful when others are greedy. Now, in a normal bull market situation, and you get these big dips and there's blood on the streets, that is an appropriate quotation. But when you're entering into a bear market, not knowing where the bottom is, the chances are that these dips in a bear market tend to go further lower. So to be buying at these points, and of course everybody can make up their own mind, the danger is always going to be that in a bear market situation, you're going to go to lower lows and lower highs. Because those quotations are really sentiments from a true bull market, but in a bear market, the situation changes around. So this is why I'm saying that when markets change, you have to change. And as mentioned in last week's video, that these dips that we're having may seem like good buying opportunities, but it doesn't have a feel like that. And they have a feel that they're going to go to a much further downside. And unfortunately, what we've got is for businesses, the tariffs environment that's been created is not a good environment, because what it's done is to increase uncertainty and fear with the prospects of lower profits, which means that investments in the future are more likely to go down. So the resultant outcomes for markets is going to be much more challenging. The only silver lining that we've really got is that the Fed would be reducing interest rates in order to stem the tide. However, they tend to form part of the scenario of the counter trend rallies that you may get on a downturn that seems to be inevitable now. But these rallies tend to be what they call dead cat bounces. So what we're going to do now is to run down Bitcoin down the various time frames to make head or tail of exactly how Bitcoin fits into this context. Okay, I'm going to start off with the monthly time frame, and what we've really got now with this particular structure, that this strong support line, which goes back to the beginning of the bull market at the end of 2022, we found support all along here, and now we're obviously falling out of that. So this is telling us that the structure is now breaking down. And as mentioned in last week's video, we're coming down to this support line of around about the 74,000, which is the resistance point of the 8 month of consolidation that we got back at the beginning of 2024. And the question is this going to fall to the downside, or are we going to get a support back to the upside? You'll see this red box here. This is the Fibonacci retracement I've had for quite a while. And what that does is to measure the Fibonacci retracement from the 49,000 low here in August 2024 to the $109,000 mark we came up to at the top of the market on the 20th of January. And this gives you a target of around about 65,000. So as we know with Bitcoin, it tends to have affinities with the 61.8. So the chances are, the probability is that this is going to come back down to retest that 65,000. These are not predictions. Every now and then I get comments saying that I'm making predictions. I can tell you that I have no intention of making any predictions. I'm merely reading the charts based on probabilities. For example, if a chart says that there's a 70% probability for this to come back down, that means there's a 30% probability to go back up. So on a balance of probabilities, the 65,000 is much more of a probability to be hit. And if it hits the 65,000, that means that the probability has played out and the chart has been quite accurate. That doesn't mean that I'm right or wrong. It just means that the probabilities have played out to the higher side. Of course, many times they do play out to the upside, which means that the lower probability plays out. So this seems to be the next target, down to 65,000. And if you look at the RSI down here, you'll see that we're making lower highs on the RSI, which is a bearish divergence to the price action, which was making higher highs here. So what we've really got is this bearish divergence playing out. How far it plays out, nobody really knows, but the probability says down to the 65,000 from where we are. And so far we've come down to as low as about 74,000. And if we move down to the weekly time frame, very similar picture here. We got a higher high at this point and a lower high on the RSI, giving us a bearish divergence which seems to be playing out. It was hopeful that we may well have played it out up to this point at 76, but with the current malaise in the markets, this has pushed Bitcoin over the edge, and we now seem to be making some sort of a run towards the lower sides. And you can see that the white trend line has quite clearly been broken on the weekly time frame. And if we move on to the daily time frame, very similar picture. What we got here was a hidden bearish divergence, which is where you make the lower high on the price, but on the RSI you actually make a higher high. So this is the reverse of the normal divergence, but this again will seem to be playing out to the downside as per the hidden bearish divergence here. And we can see more vividly the breakdown of the white trend line as we're cascading down in a waterfall to lower levels. And if we move on to the 60-day cycle, a lot of people ask about how the 60-day cycles fit into the current narrative of the turmoil in the world markets. And in normal markets, these cycles play out very well. However, in turmoil markets like currently, those factors are far more greater, far more important. We have to put these 60-day cycles into context with that because there are bigger and more powerful factors at play. So there is really no point in looking at 60-day cycles in an abnormal market. With such powerful factors at play, these really don't stand a chance to play out. And we can see quite clearly we've got a failed cycle here where we've broken down below the low of the starting point. We haven't closed there yet, but the chances are, the probability is that we're going to close below that with further to go to the downside. So we've now got a failed cycle. We did have a left translated cycle at this point where we didn't make a higher high. So we were already in a left translated cycle point of view, which was maybe giving us a clue that this is coming to the downside. So as we can see, with running down on the various time frames, the Bitcoin charts are screaming that we're going to be in a little bit of a downturn. How long that lasts, it can be 3 months, 6 months, 9 months. But if a bear market started here on the 20th of January, so we're already 3 months in now. So we could be looking at another 3 to 9 months. It really all depends on how the economy fares with the effect of the tariffs. Nobody knows how the tariffs are going to play out, but they do take time to process. So if people think this is going to be maybe a week or 2 weeks, I think they may well be disappointed. The question I want to ask is how this pans out going forward. If you've been watching my channel, you'll know that the 8 EMA on the monthly time frame in each of the previous cycles, that when we fall below that on the monthly time frame, and we are currently falling below that, and obviously we've still got 3 weeks to go, but it looks highly probable that we're going to close below the 8 EMA, and that is usually a sign at the end of a trend that we're entering into a bear market territory. And as some people mentioned in last week's comments, that the price does fall below the actual 8 EMA, but it does that at the beginning of the 4-year cycle. When it does that at the end of a 4-year cycle, i.e. in the final phase, the last year, that has more significance because that's telling you it's the end of the bull market. At this point here, these are just the ebbs and flows of the market as it's trying to rise. So it has different significance at the beginning than it does towards the end. But apart from the 8 EMA, we should always be also aware of the 50 weekly simple moving average. This is the first cycle that we had back in 2013. Once we had topped out, found support on the 50 simple moving average. But once we fell below it at this point, it seems like the price never seems to recover until you get to the end of the bear market down here. So the 50 simple moving average seems to be just giving us a bit of a clue that once you fall below the 50 simple moving average, you end up spending quite a period of time all the way down to the bottom of the bear market before we capture it once more time in the next bull market. In the second cycle, this is exactly what's happened one more time. When we topped out in December 2017, once again we found support on the 50 simple moving average, but once we fell below it, we tried to get above it here, but found resistance. And it took quite a while for us to get back once we'd bottomed out at the bear market. And this was one of the signs that we've now ended the bear market and are now going into the next bull market. And in the last cycle, when we topped out at 69,000, a similar thing happened one more time. So the same pattern was repeating. When we came back to the 50 simple moving average, found a lot of support until it eventually gave way. And then the 50 simple moving average became the resistant point. And once again, we were going to spend a period of time below until the end of the bear market. And once we'd recaptured it over here at the price of around 22,000, and guess where we are currently? We are now on the cusp of the breaking through that 50 simple moving average. So you can see quite clearly that we are trying to find support, but have broken through, but not closed yet. So we've got a whole week ahead of us now, with this candle being a very critical candle, because once we fall below this, then the chances are, based on the first 3 cycles, it's going to be incredibly difficult to recapture the 50 simple moving average, and that may well turn into resistance right until the end of a bear market. So very important to keep an eye on the 50 simple moving average. We've seen a lot of support all along here ever since we captured it here with this big Marubozu candle, and that was in March 2023. So we haven't broken through that for 2 years, but we're right on the cusp of breaking through that now. And that is that we need to just keep a critical eye on the 50 simple moving average. If we break that, as per the first 3 cycles, we may not be able to recapture that until the end of a bear market. And that's a very strong signal with Bitcoin cascading down towards the end of a bear market in the next 3 to 9 months. One of the questions I often get is that if we are in a bear market, what levels can Bitcoin actually drop down to? Maybe the previous cycles are giving us a clue here. So if we have a look at the first cycle, if we use the Fibonacci retracement, in the first cycle, which ended in 2013, if we take the measure from the previous low, which was at $2, right up to 1170, where it topped out, we can see that we roughly came to the 23.6 on the Fibonacci level. We didn't quite make it to the 38.2, but we stuck very close to the 23.6. In the second cycle, if we take from the bottom of the previous bottom at around about 160 to 19,800 top in December 2017, we came back to the 38.2 exactly at 3,100. Right on the dot there. So the first cycle was at 23.6, the second cycle at 38.2. And in the third cycle, if we take the low at 3,100 to the 69,000 in November 2021, we can see that we came back to the 50% Fibonacci level, around 15,400. It didn't quite make it, but very close to that level. Gives us a very good measure of around about where it might come down to. So if indeed we are in a bear market, if we take the 15,400 level, as per the first cycle at 23.6, that would bring Bitcoin down to 68,000. As per the second cycle at the 38.2, this would bring Bitcoin down to 51,000. And as per the third cycle, this would bring Bitcoin down to 41,000. And if the pattern repeats where we're going lower and lower each time, then the 61.8 would be at between 30 and 32,000. So these are the more important levels if indeed we are in a bear market and going to be cascading down over the next 3 to 9 months. And finally, I want to show you the VIX index. And a lot of people ask about what the VIX is. And so for the benefit of those who are not aware of the VIX, this measures the market expectation of volatility in the SP 500 over the next 30 days, acting as a fear gauge for investors. And this really indicates the market's risk and uncertainty. So as you can see with these big spikes, we've got one here over the last week. We don't get these very often. Every few years we get some of these spikes. And what they're really telling you is that there's going to be turmoil. There's a lot of fear, a lot of uncertainty. So there's a high risk and high uncertainty in the markets. And this usually spells a period of real confusion in the market. So this is where we're at the moment. It's not something that I would expect to just reverse very quickly like a V-shaped rally. It has more of a feel of a period of downturn that we can expect coming up in the next few weeks and months. Okay, I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. If you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you next weekend. Bye for now.